Caution for stocks, no caution at all for Bitcoin, which was at a record today. So what's going on?
Yeah, Bitcoin went up a lot, and then it actually came down about $8,000 all within one day. So about a $10,000 swing, give or take. But that's what you're going to get in that kind of an investment. But the market itself, you know, the big companies are a big percentage. And as they go, the market's going. And what's interesting to me is now that Amazon is in the Dow's tracking pretty much like the S&P. And Walgreens was up today, but it's not in the Dow, and Amazon was down. So that's affecting
You were
the Dow
telling
like
us that
the
would be a
S&P.
big deal, the Amazon story. You're right. That's because of the way things are weighted. It does have quite an impact. I want to talk about this credit card fees story for a moment. I mentioned it before the break that President Biden's finalizing this rule to cap credit card late fees at $8. And, you know, the average late fee is $32. They think, Consumer Financial Protection Bureau, this could save a decent amount of money. Good idea, big deal. How do you view it?
Yeah, actually, this is one of the few things I think the CFPB should be focusing on. And apparently 45 million people pay late fees to the tune of $220 a year. So it's like a $10 billion savings for people. And, you know, when you have big companies making billions of dollars in profits, this is an easy way to kind of scale that back a little bit, but help the people that are really spending it. Because the big key about late fees and any other interest is any credit card that you have a balance on, the minute the late fee hits or the minute that there's an additional charge, you pay interest from that day. So it's not even just the fees, it's the compounding interest and everything else that goes with it. So I think this is a good use of their time. We could talk about other things where they're probably not putting their time in the most beneficial.
Well, speaking of talking about other things, everybody today's talking about the fact that it's Tuesday, not Super Tuesday, but Tax Tip Tuesday. You'd be surprised. You run into anybody on the street, and that's one of the first things that comes up. Doug Flynn's Tax Tip Tuesday. Forget about the politics. So today, we're actually looking at rental properties, right, which is interesting. So take us through this on the tax benefits if you're making income from a rental property and what people need to know.
Yeah, with the advent of homeownership getting, harder, more people are renting, and boomers are the biggest 18% up increase in rentals. So if you want to invest in a way to capitalize on that or just own real estate, there's some significant tax breaks which we go through, and then talk about the ownership styles. But real quickly, there's a number of benefits that you get from ownership of real estate directly. The first one is some deductions that you don't get from your primary residence, like taxes and fees to manage the property. You can write that off. There's depreciation. You can actually take the value of the property and get an additional tax deduction based on a declining percentage of value that the property has, whether it's commercial or residential. That's humongous. If you have a $500,000 property, you're taking additional write-offs against your income. You also get the special capital gains tax treatment if you hold it more than a year. But you're also eligible for what's called a 1031 exchange. So sometimes people have a big gain in a property, and rather than sell it, they want to exchange it to something else and continue that deferral. You can do that. There's not a lot of investments that you continue to do that with, but this one you can. You also get, like any side business or side hustle, you have to pay FICA tax and self-employment tax on those earnings. That's excluded for rental income. It's not subject to the self-employment tax. So another huge savings there. And lastly, there's opportunity zones set up around the United States by the government. You get significant tax advantages for investing in those to help those areas, not the least of which is if you hold that property and have a big gain after 10 years, it's waived. You don't have to pay the taxes on the gain. So some good benefits to owning real estate. And then we could talk about the different ways you can own it. I think it's really important that people understand how you can also own it if you have a second.
All right, go ahead real quick on that, and then we'll wrap it up.
So direct ownership, of course, but if you don't have that individually, you could team up with friends and family. And there's a company out there called Nestment, and you can find them at nestment.com. They're into the co-buying. That's a way to easily do it. They connect you with people to make that very, very easy, because all those breaks really come from direct ownership. The other ways you can invest in real estate through real estate investment trusts, there are some benefits, but not quite as good. There's some income benefits, but direct ownership really is the key. And you want to have this in addition to your stocks and your bonds and your cash and everything else. So it's an important part of the portfolio. Diversify
it. Great advice as always. We always learn something from Professor Doug Flynn, so thank you. Thanks so much for watching. Just go to joinnn.com to find News Nation on your television provider. And don't forget to click the red subscribe button below to get more of News Nation's fact-driven, unbiased coverage.